What's up, dudes and dudettes? It's Pip Surfer with another daily update for the Cowabunga system. Today is Wednesday, January 27, 2010. Hope you all are having a great day today, and I've got a lot to cover, so I'm just going to jump right into it. First things I want to do is just address some of the comments yesterday. Really good stuff there, and please don't hesitate to ask if you have any questions. That's what the blog is for, is to help you understand the system better, so appreciate that. First one's from Bond Trader, which is a really good, he brings up a good point, and I'm just going to summarize it. And he's basically wanting to know about the reward to risk ratio, and it is true, a lot of times my reward to risk ratio is less than 1, which doesn't look that great, but I think you might be off a little bit on your statements here, where you said unless the system wins 100% of the time, which we know it doesn't, there's no way to make money in the long run. That's not necessarily true. For example, if you have a reward to risk ratio of, let's say your reward is 3 to 1 to your risk, then of course you'd only have to win your trades over 30% of the time. The same is true in reverse order. So if you have a reward to risk ratio less than 1, that means you need to win at least, you have to win over 50% of the time to become profitable. You don't have to win 100% of the trades, depending on what your average reward to risk ratio is. And that's why we take an average, and you want to look at an average R value so that you know how many times your system does need to win in order to come out profitable in the long run. In this case, the Cowabunga system is pretty profitable. As far as the winning percentage, is around 60 to 70%, and so that is the reason and the justification for why we can have those really bad looking reward to risk ratios. Now, if we weren't winning that much and that often, then we would have to adjust it to where we were risking less than what our reward was. But in this case, because the system does win a lot of times, it doesn't have to be that way. And the reason why I don't like using hard stops is because the market doesn't care if you put your stop 20 pips, 10 pips, 15 pips. The market doesn't worry about that. What the market does worry about are those swing highs and swing lows. And so putting a hard stop for the sake of putting a hard stop, you're kind of setting yourself up for failure because you're not giving yourself a chance. When you're trading, you're essentially betting that you are right in the direction that you're trading. So you want to give yourself a good chance, and to do that, put your stop at a place, for example, behind a swing high or a swing low. The reason we put it there is because we want to be convinced that if we are stopped out, it's not just because we got stopped out because it was 20 pips, but we got stopped out because the market, what we thought the market was doing, was wrong. We want to be proven wrong in this case, and that's why we set them, and that's why I've always been a fan of putting stops behind support, resistance, swing highs, swing lows, because that really tells me that, okay, I was wrong on this one, and that's why I was stopped out, not just, oh man, I lost 20 pips needlessly when the market was just moving or just retracing, not even near a support or resistance level. So that's the reason we do that. And I appreciate Brash Son right here for kind of addressing your comment. Very good insight, and take everything with a grain of salt, but he really does give good insight there. You do want to look at the big picture. Again, I like how he's referring to if the trade is showing that you need to have a 96 pip stop loss, and your money and your bank account bankroll doesn't warrant that for you to follow with your money management rules, then it's best to stay out of the trade. I mean, it won't always be that big of a stop. Most of the times it's a lot smaller than that, but again, you got to look at your overall bankroll and your money management rules. And as a rule of thumb, you don't want to risk any more at the max 2% of your whole account. At safe and at best, you don't want to risk anywhere over 1% of your account. And this allows you to take a string of losses and still be able to stay in the game. And that's really the best advice I can give you as far as money management goes. And just to address Super Melv 85 on the last comment, basically whatever systems I'm trading, whatever open positions I have, I just make sure that it is not more than 2% of my account at the max. I try to keep it under 1%, but at max I don't want to have open positions that can cause me to lose more than 2% of my account. And that will keep you in the game for the long run, and will keep you alive so that you can keep trading. And don't be antsy to trade every trade. Again, you gotta look at the big picture, look at your overall trading style and your money management, and cater it to you, because you know, everyone's different. Everyone has a different situation. So again, great comments, good insights, and that's what the blog is for. We're here to discuss things, bounce ideas off of each other, and hopefully it'll help us all out in the long run. So thanks again. And now I have my 15-minute, my 4-hour chart open, and I'm gonna zoom through this pretty fast because I only have about 4.5 minutes left on this video. But I got my 4-hour chart open, and the exact opposite happened today from what happened yesterday. Let's see. I'm zooming my chart back to before midnight so you can see what it looked like. Our last trend change candle took place yesterday, and that's for a downtrend. So at the start of the day, we're looking for short trades only. But as we move forward, you can see this 3 a.m. candle opened, and it made a new trend change candle, which changed the trend from down to up. However, this candle doesn't close until 7 a.m., so the official trend doesn't change until 7 a.m. And just to confirm, RSI is above 50 and stochastics are trending up. So this is a valid trend change candle. So after 7 a.m. Eastern time, the trend changes from down to up, and at this point we can only look for long trades. And you can see the rest of the day, no other new trend change candles, so just looking for long trades after 7 a.m. Alright, so now that I determined that, I can go to my 15-minute chart, and I'll move this to before midnight so you can see what it looks like. And before I do that, I want to take a look at my news events. And just to save time, I'll just show you what I put on yesterday's post. Today we had 3 news times to watch out for. At 6 a.m. we had UK CBI realized sales. 10 a.m. we had new home sales for the US. And at 2:15, I know we're not usually in the market at that time, but if we happen to be, or if you happen to be, then you want to watch out for the FOMC statement, because that is a big one. You don't want to be in the market during that time. All right, so really 6 a.m. and 10 a.m. Eastern times for me, that was the news times I was watching out for. And you can look at the news events for the day just by going to babypips.com. Click on that tools tab, and it's going to bring up the news events for the day automatically. So what I do is I just write that on a notepad just to let me know when those news events are, because I don't want to be in the market during those times. So now I can start my day. And remember, at the start of this day, I'm looking for short trades only. So I will be watching the market. The first indication I want to look for is a possible crossover to the downside. And here we get one. This is at 3:15. Let's see. RSI is below 50. Stochastics trending down. MACD is positive and losing value. So this is a valid entry. We don't have news until 6 a.m., so that's okay there. So we want to enter at the close of this candle, or as close to it as possible. In this case, it's 61.26. Our stop's going to be at the most recent swing high at 61.60. And our nearest 0.50 levels at 6100 gives us about 26 pips of potential profit, and that's okay. So now that we're in the trade, we just got to watch it, and we'll move forward. You can see we almost got our target hit here, and then in the very next candle we almost get stopped out there. And so we're holding on, and unfortunately we do get stopped out at 4:30. So not much else to do there except record the loss and just continue to move forward. Again, we're still only looking for short trades at this point, even though the market is moving up quite a bit. Here's the 6 a.m. candle, not much going on there. Okay, so here 7 a.m. we look at the 4-hour chart. Now we know that a new trend has formed. Now at this point we are switching gears, and instead of looking for short trades, we are now only looking for long trades. So I'll continue to move this forward. 8 o'clock, 8:30. Market kind of died down a little bit, so market's going down. So now we have a possible case where we can re-enter. So I'm paying closer attention to the market. 10 a.m. candle, that's a news candle, so nothing going on there. Continuing to watch it, and you can see nothing going on at all. So no crossovers there. It's noon, so I've stopped looking for trades, and that's pretty much it. So we took one loss today, but again, just brush it off, jot that down, and trade another day. So that's it. If you have any questions, feel free to ask in the blog or post in the forums, and I just appreciate everybody's help, helping me answer questions. You guys provide great insights, and just keep it up, because it really does help out people. So that's it. Have a good one, and see y'all on the next update. Cowabunga, dudes.